Wow. So if you were anywhere near the stock market this past week, it was a bit of a roller coaster, right?
Yeah, no kidding. I mean, the week of March 17th through the 21st, it really showed just how quickly things can change. Sentiment.
Totally, and that is exactly what we're diving into today, trying to make sense of it all. We've got the weekly market report, and we really want to help you understand what drove the market without getting lost in all the little daily ups and downs.
Exactly. We're going to cut through all the noise, so to speak, and try to find those big signals, looking at the major market indicators, economic news, and kind of the global picture, too. All of that.
Okay, so let's just jump right in. When we look at the Dow, S&P 500, Nasdaq, what was the big story?
Well, the Dow Jones Industrial Average, it took a bit of a hit. Down 2.4% for the week, closing at 42,627.32. And you probably noticed that 600-point drop on Monday. Yikes, right?
Yeah, that got everyone's attention.
It was mostly triggered by, I think, those tariff worries kind of popping back up. And while it did recover a little by Friday, ending with a 1.2% gain, the fact that it's still over 5% lower than that February peak, well, that suggests to me, at least, that people are still uneasy about the whole thing.
Makes sense. So little recovery, but still a net loss for the week. How about the S&P 500? Did it follow the same pattern?
Yeah, similar story there. S&P 500 ended down 1% for the week, closing at 5,923.36. But here's the thing. It actually dipped into what we call correction territory on Wednesday for a bit.
Right. That's the 10% drop, right? Everyone watches that.
Exactly. 10% down from its recent high, and in this case, that February peak.
So it touched it, but didn't quite stay there. What happened?
Well, the Federal Reserve, they made their announcement midweek, and that seemed to give things a little boost. And we also saw a 0.5% gain on Friday. But even with those, this was the fifth week in a row that the S&P 500 ended down. So that's a trend that we have to pay attention to.
Okay, so 5 weeks straight, not exactly a great sign.
Yeah.
How about the Nasdaq? That's really tech heavy, right? What happened there?
No, the Nasdaq had it rough this week. It was down the most out of all three, actually. Dropped 3.1%, closing at 18,689.62. And get this, it actually entered a deeper correction than the S&P 500, over 12% down from that December 2024 peak. Tech stocks were really leading that sell-off early in the week.
Oof. So if you're in tech, this wasn't a fun week.
Not at all. Even with a tiny little bump on Friday, like 0.2%, it was still the worst performer. So yeah, something was hitting tech particularly hard.
Okay, so it sounds like overall there were a few different things pulling the market in different directions this week.
For sure. I mean, you had the tariff concerns pushing things down, but then you also had those hopes that the Fed might do something to help, maybe with monetary policy. That back and forth really created a lot of that volatility we saw.
Yeah, it definitely felt like a tug of war. Let's talk about tariffs then. What were the big developments there that spooked everyone?
Well, first, we had those existing tariffs from President Trump on Canada and Mexico, that 25% that started on March 11th. Those were still causing worry. But then, to make things even worse, he doubled the tariffs on Chinese imports to 20%. And that really kicked things up a notch.
Oh, yeah, that got everyone's attention. So it wasn't just the existing tariffs, but the potential for things to get even worse, right?
Right. And then Canada announced midweek they were going to put retaliatory tariffs on U.S. energy exports. And by Friday, Mexico was saying they might do something similar. So suddenly it wasn't just tariffs, but a full-blown trade war maybe, and that's what really scared people.
Yeah, that makes sense. And I imagine that kind of uncertainty is really bad for businesses, right?
Totally. I mean, the big fear here is that all this could disrupt those global supply chains. If importing stuff gets way more expensive, that's going to affect a lot of industries, especially tech and industrial companies that rely on getting materials and parts from overseas. And eventually, those higher costs will get passed down to consumers, so nobody wins in a trade war.
Right, higher prices for everybody.
Okay.
Okay, so tariffs were a big factor. Then we had the Federal Reserve meeting. What happened there?
Right. So the FOMC, that's the Federal Open Market Committee, they're the ones that decide monetary policy. They had their meeting, and, well, as most people expected, they kept the federal funds rate the same in that 4.25% to 4.5% range. But here's what you really need to know. They released their updated dot plot, and what it showed was that they're expecting 2 rate cuts in both 2025 and 2026.
Okay, so they're thinking about cuts, but not right away. Is that what caused the market to jump a little bit on Wednesday?
It definitely played a role. The market generally likes to see the possibility of rate cuts down the line. But the thing is, the Fed is being cautious. They're worried about the economy slowing down, but they're also worried about inflation going up because of those tariffs. It's a balancing act. And you could see that in how the market reacted. We had that little rally, but then the tariff fears came back, and those gains fizzled out.
Makes sense. So the Fed is in a tough spot. What about the economic data that came out this week? What did that tell us?
Well, the data was kind of mixed, which probably added to all the uncertainty. On Tuesday, we got the February retail sales report, and it showed a 0.3% increase. Not bad, but it was actually less than the 0.5% most people were expecting.
Huh, a little softer than expected. What else did we see?
Wednesday, we got the CPI report. That's the Consumer Price Index. And actually, there was some good news there.
Mm,
Inflation eased a little bit to 3.3% year over year, down from 3.4%. So that suggests maybe the Fed's efforts to fight inflation are working a bit, and it could mean they might actually cut rates later on.
Okay, so inflation is cooling down a bit,
Yeah.
but didn't consumer sentiment take a hit later in the week?
Yeah, on Friday, the University of Michigan released their Consumer Confidence Index, and it dropped a lot, actually, like 11%, all the way down to 57.9. That's the lowest it's been since late 2023, so that's not good. It definitely raised some concerns about maybe a recession coming, so we have inflation easing up, but consumers are getting more pessimistic. It's a weird mix.
Definitely not a clear picture.
Yeah.
Now, you mentioned tech getting hit hard, and it sounds like it wasn't just tariffs, right? What else was going on?
Right. There were these reports that NVIDIA, the chip maker, their AI chips might be finding their way to China, maybe even bypassing those U.S. export controls. That's a big no-no, and it caused a lot of people to sell off their semiconductor stocks. Plus, there's still this underlying concern that a lot of tech companies are overvalued. So it was kind of a double whammy for tech. Even though some of the stocks bounced back a bit at the end of the week, those early losses really dragged the Nasdaq down.
So regulatory worries and valuation concerns all hitting tech at once. Let's switch gears a bit and talk about how different sectors of the market performed. What stood out to you?
Well, one thing that was pretty clear was that investors were looking for safety. The so-called defensive sectors did better. Technology, as we talked about, was down 3.5%. That was mostly the semiconductor companies and those high-growth tech stocks that are really sensitive to things like tariffs and export restrictions. But hey, at least Tesla and Nvidia had a good rebound later in the week, so that helped a little.
Yeah, those are some big players in tech. What about sectors that are tied more to the overall economy and consumer spending? How did they do?
Not great. Consumer discretionary was down 2%, and that's mostly because people are worried about consumer sentiment weakening, as we saw with that index, and those tariffs potentially driving prices up. Retailers and automakers felt the pain, even Tesla, though, like I said, some of them did bounce back a bit at the end.
Right. So not a great week for companies that rely on people spending money. How about the financial sector? They're pretty sensitive to interest rates and economic growth, right?
Exactly. Financials were down 2.2%, underperforming the overall market. The uncertainty around what the Fed is going to do with rates, plus those worries about the economy slowing down that kind of outweighed any potential benefits they might get from higher rates. And actually, regional banks were hit even harder, which is something to keep an eye on.
So more uncertainty, more worry for financials. How about those industrial companies? What happened there?
Industrials, they didn't do so well either, down 2.1%. The fear there is that manufacturing might slow down, and those supply chain disruptions from the trade stuff, that's really hurting companies that do a lot of business overseas.
Okay, so it sounds like a lot of the more economically sensitive sectors were down this week. Were there any bright spots? Any places where investors saw some gains?
Yeah, when things get rocky, people tend to look for those safer bets. Utilities and consumer staples, those are the classic defensive sectors, and they actually did pretty well, both up 0.5% for the week. Investors like the stability of companies like NextEra Energy in utilities and Procter& Gamble in consumer staples. When the market's going crazy, people still need electricity and toothpaste, right?
Right, that makes sense.
Hmm.
Now let's talk about some specific stocks that had some big moves this week. NVIDIA was definitely one that made headlines.
Oh, yeah. NVIDIA was all over the place. Ended the week down 3%. But man, that 8% drop on Monday after those reports about China, that was brutal. Then on Wednesday, it jumped back up 6.4% after the Fed announcement. But the regulatory worries are still there, so it's hard to say what's next for them.
Up and down, up and down. How about Tesla? It always seems to be making big moves.
Tesla, yeah, they had a rough week too. Down 5.34%. They got hit by those tariff risks, and they're still dealing with the Cybertruck recall, remember. They also had a nice jump on Wednesday, 7.6%, but it wasn't enough to make up for the losses earlier in the week.
So another one that got caught in the crossfire. How about FedEx? They're a pretty good indicator of how the economy is doing, right?
Right, and FedEx, they slipped 4% this week. An analyst downgraded them, said they're seeing weaker demand for shipping, and that could be a sign that the economy is slowing down. If businesses aren't shipping as much stuff, it could mean things are cooling off.
That's definitely something to keep an eye on. Were there any individual stocks that actually had a good week?
Well, there were a couple. Target, their stack actually went up 3.2% after they announced really strong earnings. So that was a nice surprise, especially in the consumer discretionary sector. Shows that maybe consumers aren't as weak as some people think. And then there's Intel. They jumped 4.6% after there were reports that they might be doing a joint venture with Taiwan Semiconductor. That's a big deal in the chip world. And it was seen as a positive sign in an otherwise tough week for semiconductors.
So a few glimmers of hope there.
Mhm.
Okay, let's talk about bonds. What happened in the bond market with all this craziness in stocks?
So bonds, they did what they usually do when things get scary. They went up. On Monday, when the stock market was tanking, investors piled into those safe government bonds, and the yield on the 10-year Treasury note dropped to 4.32%. But then, after the CPI and Fed announcements on Wednesday, people weren't so sure about those rate cuts anymore, so the yield went back up to 4.35%. By Friday, it settled at 4.34%, so still pretty stable overall. It tells me that investors are being cautious, using treasuries as a safe place to park their money while they wait to see what happens next.
So bonds are still seen as a safe haven. Makes sense. How about commodities? What was going on there?
Commodities were interesting. Oil, specifically WTI crude, dropped 2.5% to $67.50 per barrel. That was partly because OPEC, they're planning on easing those production cuts in April, which would increase supply. But at the same time, everyone's worried about demand weakening because of those tariffs, which could slow down the global economy. So more supply, maybe less demand, that equals lower prices.
Got it. What about gold? It's usually seen as a safe haven too, right?
Exactly. Gold did what it usually does when things get uncertain. It went up, gained 1.5% this week, hit $2,910 an ounce. People see it as a safe bet when stocks are going down, and there are geopolitical tensions like we're seeing with all this trade stuff.
So bronze and gold both doing well this week. Now, you mentioned earlier that what happens in the U.S. market affects other markets around the world. What did we see globally?
Yeah, no market's an island, you know? All this risk aversion in the US definitely spilled over into other markets. In Europe, the STOXX 600 index was down, mostly because they're worried about those tariffs hurting their economies. They rely a lot on exports. Plus, the European Central Bank lowered their growth forecast for 2025, so that didn't help. And then Canada announced those retaliatory tariffs, and that added even more pressure because global trade is all interconnected.
So Europe definitely felt the impact. What about Asia?
Asia also took a hit. Japan's Nikkei 225 index was down 1.88%, mostly because of the weakness in U.S. tech stocks, since they have a lot of tech companies over there. And Hong Kong's Hang Seng index, it fell 0.41%. They're worried about China's economy slowing down, and those U.S. tariffs on Chinese goods are directly affecting them.
And how about emerging markets? They tend to be even more sensitive to global ups and downs, right?
Yeah, they do. And they saw a lot of investors pulling their money out this week. Currencies like the Mexican peso weakened because of those tariffs, and that just made things worse for their stock markets. It was a tough week for emerging markets.
Okay, so lots of uncertainty and volatility all over the world. Now, looking ahead to next week, what are some of the key things that investors should be watching? What does the weekly market report say?
Well, we've got some important economic data coming out next week. We'll get the February PCE inflation data. That's the one the Fed watches closely. And we'll get the March manufacturing PMI, which tells us how busy factories are. Those numbers will give us a better idea of where inflation and the economy are headed. And that could definitely affect what the Fed decides to do with interest rates.
So more clues about the economy. What else should people be paying attention to?
Definitely keep an eye on the tariff situation. Any news about how those tariffs are actually affecting the economy, or if Canada and Mexico do anything else in retaliation, that's going to be big news. Any clarity on the trade front or even more uncertainty could make the market pretty jumpy.
Yeah, the trade situation is still a big question mark. What about earnings season? Any companies reporting next week that we should be watching?
Yeah, we'll be hearing from Costco and Kroger, both big consumer-facing companies. Their results and what they say about the future will give us a good sense of how strong consumer spending really is. That could affect how people see different sectors and the whole economy.
So consumer health is still a key factor. And finally, any more news from the Fed next week?
Well, even though their meeting is over, anything Fed officials say in speeches or interviews, that's going to get a lot of attention. People will be listening for any hints about whether they're changing their minds on interest rates or how they see the economy.
So another busy week coming up with lots of potential for the market to move in either direction. It sounds like things are still pretty unpredictable.
Absolutely. Investors should be prepared for more volatility as all these different factors play out.
Well, to wrap it up, it was a wild week in the market, driven by those ongoing worries about tariffs, the Fed's cautious approach, mixed economic data, and some big swings in the tech sector.
And while we did see a little bit of a rebound towards the end of the week, those underlying concerns are still there. You could see that in how different sectors performed and how nervous other markets around the world were.
So here's something to think about. Given all this uncertainty around trade, interest rates, and the economy, what do you think could happen next week that might completely change the direction of the market? And how would that affect your own view of the economy? It's definitely a time to stay informed and pay attention to what's happening. Thanks for joining us for this deep dive.
Thanks for having me.